Good day, ladies and gentlemen. Welcome back to another Bitcoin video. Today, I'm going to be debunking one of the bearish arguments on Bitcoin, and that is the Wyckoff accumulation theory, the Wyckoff accumulation pattern that people seem to be thinking is happening on Bitcoin. This is a pattern, okay, that is essentially established, I think over a century ago now, by someone very famous, someone very intelligent in the investing game. Last name Wyckoff, can't remember his first name. The point of the matter is this. That person established this theory, established this pattern, and kind of identified it, I should say, as a pattern that whales use to manipulate the price action in order to get better prices, right? And in order to kind of muck around with what retail's doing, right? So get the best price possible for the big institutions, the big corporations, whatever it may be, and honestly, just play the retail. It's kind of like an emotional pattern they use on retail. Now, this is something we saw kind of heavily circulating throughout the bull market in 2021. You will have remembered the Wyckoff distribution theory that was used, distribution pattern that was used over here in this period here. Let me just bring it up real quick. So you might remember this chart if you're around in crypto in 2021. People were using this kind of, I guess you could say, formation pattern here to identify what was going on in the price, and eventually it ended up, speculating on whether Bitcoin will drop or not, and Bitcoin ended up dropping. So, was that because of Wyckoff, or was it because the pattern was bearish, right? That's the real question. I would say it wasn't because of Wyckoff. I don't necessarily believe in Wyckoff. I think it's just, Wyckoff is just an identification of patterns that generally play out, and this was obviously a bearish market pattern, and so we went downwards. Was it because of Wyckoff, or was it just because that's a bearish market pattern? Was it because we saw, an ascending wedge formation coupled by many divergences while moving upwards way too fast without any corrections? Or was it Wyckoff? That's the question you got to get into. Because, it's easy to, I know I'm kind of jumping the gun and answering this question here, but it's very easy to identify random patterns. And this is something that people who believe in Elliott wave theory do quite often. You can identify 5 waves. Identifying 5 waves is very simple. The fact of the matter is, anyone can identify 5 waves at any point in the chart across any time frame ever. That doesn't mean it's correct. Okay, so this is one of my problems with Wyckoff, but we'll get into what the actual pattern is first and foremost. So you can see I've tried my best to kind of copy the pattern into what's going on with the price action now. Now, what I will say is this: it may look effective on the chart currently, but I'll tell you right now, what I made here on the chart, what I copied down, is very, very slightly relative to what's going on in the actual pattern itself, right? This was hard to draw, right? It's messy, all right? To be completely honest with you, I don't think this even relates, because we've got many things that didn't happen. We've got many things that are meant to happen on the drawing here that simply have not happened on the chart. So that's the first point. I mean, and all we need to do is really just go from step one. What we can see is that on the chart here, you can see we meant to drop down quite fast. We didn't drop down fast. We had an accumulation period for a month. Okay, that's not meant to happen. Secondly, we're meant to see a higher high and then a higher low, and then kind of accumulation in kind of this harmonic pattern. We didn't see any sort of harmonic pattern over here. Then we're meant to drop down rapidly. We're not meant to see an extensive accumulation period in kind of like a cup formation that goes on for 3 months. No, we're meant to drop down rapidly, which we didn't do, okay? And then we're finally meant to see this cup formation, and we didn't see a cup. We saw a harmonic pattern here. So, just straight off the bat. And then of course, on the actual the move upwards, right? On the move upwards here, it's meant to be a sharp move upwards and then a drop back down. Right. The fact of the matter is this, okay? It's a stretch. It's a stretch to call this pattern we're seeing on the chart right now a resemblance of the Wyckoff accumulation. Now, I know now here's the thing, right? The patterns are meant to be guidelines. Wyckoff is meant to be a guideline. So we could very well be seeing a Wyckoff accumulation, but even if we are seeing that, even if we are seeing a Wyckoff accumulation, I would beg this, I would propose this to you. What makes you think that a charting pattern, okay, regardless of what it is, what makes you think that a charting pattern is stronger than the 4-year cycle theory on Bitcoin, which has a date range trend measuring from top to top, a date range trend measuring from bottom to bottom, a date range trend measuring from top to bottom, a date range trend measuring from bottom to top, all of which are played out 3 consecutive times, which has the 4-year presidential cycle theory on its side, which has the halving theory on its side, which has a theory, which has a date range trend between the bottom and the halving on its side, that speculated the bottom being in November, which has a date range trend between top and new all-time high, which has a date range trend forming between breakdown from horizontal bull market support zone and break back above it as bear market resistance. What makes you think that a random charting pattern okay, that vaguely resembles Wyckoff, is stronger than all of that. That's all I've got to say. Check out the Bitget Exchange. This is an exchange that we partnered with on the Wolves Crypto YouTube channel. 5 times lower fees than the Binance Protection Fund. They've released their reserves information. It's a completely secure exchange, to the best of my knowledge. We've got 15% of discounts, 15% of trading you get a 15% discount on trading fees, I should say, if you sign up using my referral link, which you can find in the pinned comment and description. You can also check out the Crypto Academy Become a Trader course. This is a 10-unit course developed by myself and Mega Crypto to teach people how to trade in a university-style format. So if you're interested in learning how to trade, go ahead and check out the website link in the pinned comment below. And then finally, I want to give a quick shout out to the VIP group, right? I've got a Wolves of Crypto VIP group on Telegram where we trade altcoins sub-daily. We've been doing very, very profitable trades. You can see our trading record, our trading history from Q4 if you're interested. And you can ultimately join the group. It's 100 USD for 3 months, and I'm sure you won't be disappointed. So thanks for watching. Hope you enjoyed. Catch you guys in the next video.